Today we are going to start with sources of long-term finance, which is going to be the first chapter of CMIF2 learning. So under sources of long-term finance, there are four categories we need to cover. So this topic will revolve around long-term debt, operation of stock and bond markets, and role of advisors and the shares or issuance of shares. So these are the four areas that we are going to look at. Now let us start with the operation of stock and bond markets first. Now when you look at the operation of bonds and stock markets, this is a financial market. Now how does the financial market operate? Now if you look at financial markets in anywhere in the world, you will find that there are similar characteristics. The first thing is that it is a place where the lenders or the people who with excess money or surplus of money will meet the people who are with the deficit of money, or we call them the borrowers. So what happens in the financial market is it's a direct finance, so there is a financial intermediary. Financial market is here, so lender and borrower meet each other and fund it. And on the other hand, there are a set of people whom we call the financial intermediaries. They themselves collect funds from the lenders, and one way is they finance directly to borrowers, and also they channel their funds through financial markets and ensure that it is sent to borrowers. So this is a cycle which involves both direct finance as well as indirect finance. Now, what is a capital market? Now, remember, capital markets are generally for trading in medium and long-term finance. So, basically, they will trade in the form of financial instruments which may carry the characteristics of equity, shares, and corporate bonds. Now, in UK, if you look at, there are two capital markets. One is the stock exchange in London, which is we call the main market. Now, this is for the companies with a full stock exchange listing. So, they are generally bigger companies with a larger capital and with a larger presence of shareholders and larger profits. On the other hand, there is another market we have, that is alternative investment market, which is more closely regulated second tier market. We call that AIM. Now, stock exchange is also a place where you will see the dealing of government securities will take place. Now, what is the reason for the existence of the stock market? As we said, the firms will obtain long-term or medium-term capital by two ways. One is they will raise share capital. So when the shares capitals are issued, they are generally issued in the form of ordinary shares. Now, what they are doing is, when you are issuing an ordinary share capital, you are inviting your investors to take a proportion of ownership of your business. And also, a firm is also able to obtain long-term finance through loan capital. Now, what is long-term loan capital? Because long-term loan capital is the capital with the period or tenor of more than 3 years generally. So this capital is generally raised in form of loan notes, corporate bonds, debentures, or unsecured and convertible bonds. Now, in a stock market, you will see there are two types of markets. One is the primary market and the other one is the secondary market. Now, what is a primary market? Now, what the primary market will do is, it will enable organizations to raise finance by issuing of shares or even bonds. So, for a company to get this, or for a company to issue shares to a public at large, the company should carry a public company status, which means it should be a PLC or a public listed company. Now, what happens is, now, although people buy shares in the primary market, the willingness to buy or shares or invest in these shares will be limited unless there is a secondary market, because the secondary market is the place which enable the investors to exchange their investments or liquidate their investments by selling it to other investors. So For a good stock market to operate and for firms to be able to raise capital in sufficient capital for their operation, the marketability of securities will be very important. And then exchange and over the counter markets. Now, exchanges is a place where your buyers and sellers of securities will buy and sell securities in one location. Now we know the London Stock Exchange is such place, and we have New York Stock Exchange, Mumbai Stock Exchange. All these places, what happens is buyers and sellers of securities buy and sell securities in a particular place. Now, on the other hand, you have over-the-counter markets as well. That is where buyers and sellers transact with each other directly, and they directly deal through negotiation. Now, this will happen in most of the cases when the companies are not listed. If you have an unlisted entity and you have potential investors for your company, yes, then the over-the-counter market operations will come into play. Now, when you learn about the sources of finance and about the issuances of shares, it is important for us to understand what kinds of advisors that are present in the stock markets and what are their roles as well. Now, when you learn about the role of the advisors, we will see that there are different people. Now, one kind of a role is the sponsor. Now, a sponsor is a person who is coordinating the overall process of an initial public offering of shares and who will give the advices to the board. So, generally, this will be either an investment banker or even a person within your organization who will have an understanding of how the entire process would work. Then you have a person called book runner or an underwriter. Now, this person is the person who will take the responsibility of ensuring that the required capital of the business is being subscribed to by the investors. Now, what underwriter does this in the event such a subscription does not happen through the investors, he will undertake himself to fund that amount. So, for this underwriting arrangement, he will charge a fee, which is an upfront fee, which will be generally about 1% or 0.5% of the entire transaction value. Then we also have lawyers who will have to carry out due diligence, draft prospects, and provide legal opinion. We also have reporting accountant who performs financial due diligence and providing of tax advices. Then we also need to have a financial public relation who will develop communication strategy on pre and post initial public offerings. And we also need different people called registrars, financial test remuneration consultant for a successful launch of an initial public offering. Now, having looked at how the processes and long-term finances work, it is important for us to understand what are the sources that is existence when we look at equity finance. Now, one of the sources is the ordinary share, and this is the most popular issue. Now, ordinary shareholders, what do they have? They have a right as a result of their ownership of the share. So remember, these are the people who basically own your company. So what can they do? They can attend company general meetings. They can vote on important company matters. Yes, they are entitled to receive a share of any agreed dividend. And remember, they are also receive the annual report and accounts, and they can participate in any new issue of shares. Now, importantly, these ordinary shareholders will receive a share of any assets remaining after liquidation. So, they are the last people to receive any asset, whatever remaining after liquidation. So, they are the people who are the owners of the business as well as the risk takers of this business entity. Now, why should the organizations be facing listing of a stock market? It is important for us to understand this reason because most of the organizations would opt to go for stock market listing. Now, what is the reason? Number one, it would enhance your public image. If you are a business entity, it will always help you to enhance the public image. They The original business owners are also able to realize their holding. Now, you may have a company worth of £1 billion, but what's the purpose if you are not being able to realize it? So, when you go for the stock market, it allows you to realize your holding without selling your company at large. And also, the original owners are able to create more funds for their future projects by selling portions of their holding. And when you are a listed entity, it is easier to see growth by acquisition through horizontal and vertical integration, because when you are a public company, it is easy for you to go and acquire other smaller companies, and the company, you have a large access pool of finance, so it is easier for you to grow. So that is an advantage that you have. And when you are a company which is limited by its capacity, and where your shareholders capacity will be limited, the amount of finance that you have is only what your shareholders have. Whereas when you are a public listed entity, you have access to a wider pool of finance, because your shareholder listing itself is large enough. And also, this will improve the marketability of shares, because you will see the presence of the secondary market when the companies are get listed in a stock market. What are the disadvantages of a stock market listing? There will be significantly greater public regulation, accountability, and scrutiny, of course, because it involves public money. So, which means your regulations will obviously come. And you will have a wider circle of investors with more exacting requirements, which who will be holding into the shares. And also, there are certain additional costs involved in making share issues, like brokerage commissions and underwriting fees. So these are important factors that we need to consider when we are looking at a stock market listing. And there are different methods of obtaining a listing. Now, the process of making shares available to investors by obtaining a quotation on a stock exchange is called a flotation. So, there are three methods of flotation generally we talk about, and this involves offer for sale, placing, and introduction. So, all these three methods are about for obtaining a listing, and we will be discussing about these methods in the next part.